Hello viewers, welcome to my channel. I am Hasham. Last video I have completed two main problems on funds flow analysis. In this problem I am going to start the third and fourth problem. So already you are aware about what are the statements we have to make in funds flow analysis. First one, statement of changes in working capital. Second, statement of source and application of funds. In statement of changes in working capital, we take only current assets and current liabilities. The purpose is to find out whether there is increase in working capital or decrease in working capital. The non-current assets and non-current liabilities we take while preparing statement of source and application of funds. So keep a rhythm of watching one video with another video. If you join in between, you will not be able to understand. Similarly, if you leave anything without watching the complete video, you cannot be able to learn. So my suggestion, if you want the complete command on the topic, watch all the videos from beginning till end, one after the other. Now, before starting the third problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep ready and take a screenshot of this third problem. Then I'll explain each and every point about this problem. Come on, see the third problem. The following is the summarized balance sheet of Sandhya Limited as on 31st March 2016 and 31st March 2017. The current year is 2017. Particulars are given, balance sheet is given, equity and liabilities, shareholders fund, share capital. Share capital last year 40,000, current year 50,000. Increase. That means during the current year there is issue of shares. And issue of shares will be taken on the source side. Already I told you. Always while watching this video, keep a notebook beside you and a pen. Whenever I say a new point, important point, write it down. So issue of shares. Next, reserves and surplus. This will make use to calculate funds from operation. So last year it was 3,000, current year 3,200. There is increase. That means funds from operation. Then 10% debentures are there. Last year 6,000, current year 7,000. That means during the current year, debentures increased. How it is increased? Issue of debentures. Just like share capital increased, debenture also increased. The company has issued the shares and the company has issued the debentures. The issue of debentures is a source. Then current liabilities. Three current liabilities are given: short-term borrowing, trade payable, short-term provision. All the three current liabilities we take in working capital. First statement. Then assets. Non-current assets, fixed assets. Last year fixed asset 30,000, current year 25,000. There is a note given. In this problem, notes are given. First note is regarding share capital. Second note, reserves and surplus. Third, short-term provisions. And fourth, fixed assets. So in the problem, all the details are given regarding these notes. So we will see what are the notes regarding fourth schedule, that is fixed assets. Then current assets are inventories, trade receivable, cash and cash equivalent. Three current assets are given. Now next page, notes to accounts. Here 1, 2, 3, 4, 4 notes are there. What are there in 4 notes? Here it is given. Note number 1, share capital. Equity share capital last year 40,000, current year 40,000. No change in equity share. Ignore. 7% redeemable preference share capital last year nil, current year 10,000. That means during the current year preference shares were issued. So issue of preference share is a source. So remember, in source and application, issue of preference shares 10,000. Only current assets and current liability will be taken in working capital. Non-current items will take it here. So issue of preference shares 10,000. Next one, reserves and surplus. General reserve last year 2,000, current year 2,000, no change. Ignore. Surplus as per the statement of profit and loss. These are the reserves and surplus, or we can say surplus as per profit and loss account. Last year it is 1,000, current year it is 1,200. So increase, that means funds from operation. If no adjustment are given, then this 200 itself we can take funds from operation. But we'll see what are the adjustments. Still we have not read the complete problem. Short-term provisions. Short-term provisions, note number 3. Here short-term provisions are given 8,000 last year, 10,000 current year. Now the details are, short-term provisions consist of provision for tax and proposed dividend. So directly, instead of taking short-term provisions, we'll take the breakup. Short-term provision consists of provision for tax and proposed dividend. Both are current liabilities we'll treat. Then fixed assets. Fixed assets original cost last year 41,000, current year 40,000. That means fixed assets have decreased. Why the fixed assets will decrease? Because of sale. Because of sale. So how much is fixed asset decreased? 1,000. So sale of fixed asset is a source. When we purchase fixed asset, it is an application. When we sell the fixed asset, it is a source. If the fixed asset increases, it is purchased. When fixed asset decreases, it's a sale. So here sale 1,000. So it's a source. Source side, sale of fixed asset 1,000. Sale of fixed asset 1,000. Accumulated depreciation. Last year accumulated depreciation was 11,000 and current year accumulated depreciation is 15,000. So how much depreciation increased? 4,000. 15,000 minus 11,000. It means during the current year, depreciation provided on fixed asset is 4,000. By comparing, we come to know. Last year 11,000, current year 15,000. So 4,000 depreciation increased because we have provided. Depreciation is a non-cash item. It will be added to profit to calculate funds from operation. Note it down immediately. To calculate funds from operation, we add depreciation to profit. Profit plus depreciation is equal to funds from operation, right? So here you can see increase in surplus in profit and loss statement. So see here, profit and loss statement is given surplus as per statement of profit and loss. Last year 1,000, current year 1,200. So 200 increased. So 1,200 minus 1,000, 200 is the increase in surplus in P&L statement. To this we add non-cash, non-operating item. So here non-cash, non-operating expenses, depreciation. Depreciation on fixed asset 4,000. So total 200 plus 4,000, 4,200 is the funds from operation. And funds from operation will be taken under source. This is the source. Here you have to take funds from operation 4,200. Right? First of all, we'll complete the working capital. Current assets are given inventories, trade receivable, cash and cash equivalent. Inventories, trade receivable, cash. Every problem we are doing the same thing. No difference at all. Very easy to make this working capital. The only difficult or be careful regarding preparation of source and application. So values are given for last year and current year. Same values, whatever is given in the problem, I have copied down. Then current liabilities. Under current liabilities, 3 items are there. What are the 3 items? Short-term borrowings, trade payable and short-term provisions. The short-term borrowing, trade payable, short-term provision. Whatever is given in the problem, same values I have taken here. Then take the total. A is the total of current assets, B is the total of current liabilities. So A minus B, current assets minus current liability will get working capital. So 51,500 minus 32,500, 19,000 working capital last year. Current year 63,000 minus 27,800, 35,200 is the working capital current year. So last year 19,000, current year 35,200. Increase in working capital. So deduct 35,200 minus 19,000, you get 16,200. Put the 16,200 in that column where lower amount is there. Lower amount is 19,000. In that, write down 16,200. Now take the total, it will be 35,200. So first of all, don't write anything in increase and decrease column. First of all, finish off the last year and current year columns. We got the answer. 16,200 is the increase in working capital. Now, to check whether 16,200 is correct or not, we have to open increase and decrease column. So 30,000 to 35,000 increase by 5,000. 20 to 24 increased by 4,000. 1,500 to 4,000 increased by 2,400. All increased. Here, current liability, opposite rule. If increase, take it decrease column. If decrease, take it in increase column. Already I explained you in the last videos. So 12,500, 6,800 decreased. So increase column 5,700. 12,000 to 11,000 decreased. So increase column. Yeah, 8,000 to 10,000 increased. So decrease column 2,000. Lastly, if you have increase, take that increase in the decrease column. 16,200 decrease column. The total will be 18,200 tallied. Both increase and decrease column, both same amount. That means our answer is absolutely right. 16,200 what we got increase in working capital, that is correct because we got total same. Over. Now statement of source and application. For this we compare the non-current items. Share capital, issue of preference shares 10,000. Funds from operation, increase in surplus. Last year 1,000, current year 1,200. So increase by 200. To this non-cash, non-operating expense, that is depreciation, provided 4,000. So 4,200 funds from operation. Sale of fixed asset. Last year fixed asset 41,000. Current year it has become 40,000. Original cost. So there is sale of fixed asset. Similarly, debentures. Last year debentures were given 6,000. Current year debentures are 7,000. 1,000 debentures issued. Source side. Issue of debentures. Lastly, if you get increase in working capital, take the increase on application side. If you get decrease in working capital, take it on the source side. Every problem I am saying and all the problems you have to follow the same rule. If decrease is the source side, increase is the application side. Here increase 16,200 I have taken. Now find out the total. The total is 16,200 on source and application. That means we have done right. If you commit any mistake, then the total of source and application will not tally. That is the proof. So this is the end of problem number 3. Come on, now I am going to start the next problem. Problem number 4. See carefully. From the following balance sheets of Siddhant Limited, prepare funds flow statement. That means both we have to make statement of source and application and statement of changes in working capital. So here March 31st, 2016, last year 2017, current year. Equity and liabilities, shareholders funds. Share capital 2,40,000 last year, current year 3,60,000. That means during the current year there is issue of shares. So issue of share is a source. So issue of shares should be taken in source. Statement of source and application on source side, issue of shares, right? Next one, reserves and surplus 1,05,000 last year, current year 1,25,000. So what are the notes given for reserves and surplus? Next page it is given. Reserves and surplus, the breakup, that 1,05,000, 1,05,000 and 2,07,300. The total breakup consists of share premium, general reserve, surplus in statement of profit and loss. Number of new points are there in this problem, so give more concentration. Share premium. Last year share premium was 24,000. Current year share premium is 36,000. That means during the current year, whatever shares are issued, that shares were issued at a premium. How much premium? 24,000 last year, current year 36,000. 12,000 rupees premium increased. 12,000 premium increased. How much is share capital increased? Share capital increased by 360 minus 240 is 120. 1,20,000 share capital increased and 12,000 share premium increased. So you should take combine. You should take both share capital and share premium. So here issue of shares including premium. 1,20,000 share capital increased and 12,000 share premium increased. So total 1,32,000. Like this you have to write down. Don't take separately share premium and share capital. Combine it. Then apart from that, reserves and surplus. Reserve, general reserve. General reserve last year 18,000, current year 27,000. That means during the current year, 9,000 rupees are transferred to general reserve. Because last year it is 18,000, current year 27,000. So this transfer to general reserve will be considered while calculating funds from operation. Calculation of funds from operation, non-cash, non-operating expenses transferred to general reserve 9,000. How you got 9,000? 27,000 minus 18,000 general reserve. Apart from that, surplus as per statement of profit and loss, that is 58,500 last year, 62,000 current year. That means surplus increased. So this is the starting point for calculating funds from operation. Increase in surplus. Current year 62,000. Last year 58,500. So increase how much? 3,500. Always for calculating funds from operation, the starting point is surplus. So surplus 3,500. To this we add non-cash, non-operating items. Remember first one, transfer to general reserve 9,000. Next, after that, we have 8% debentures. Debentures last year 0, current year 78,000. That means during the current year, debentures were issued. So issue of debentures is a source. So here you can write issue of debentures 78,000. Right? Then current liabilities. Current liabilities are trade payable and short-term provisions. Both will be taken under current liability here. Trade payable, short-term provisions. Then non-current assets, fixed assets. Fixed assets 2,80,200 last year, current year 4,98,000. Fixed assets increased. Why it is increased? By purchasing. The breakup is given on the next page. Next page you can see fixed assets building. Building 166,200 and 339,600. The value of the building increased. That means during the current year, building purchased. When we purchase the building, it's an application. Money is going out. So here, purchase of building 339,600 minus 166,200, 173,400. Now, machinery and furniture. Regarding machinery and furniture, adjustment is given. Provide depreciation on machinery 38,400 and furniture 1,200. So we are required to make the accounts. When depreciation is given separately, we have to make the accounts, two accounts, machinery account and furniture account, because depreciation is given. So how to make the account? Machinery account. Last year balance 106,800. So to balance brought down 106,800. Current year balance of machinery is 153,900. So 153,900. So opening balance debit side, closing balance credit side. This is to balance brought down. This is by balance carried down. Right? Opening and closing. Now depreciation. How much is the depreciation on machinery? 38,400. So here you should write by depreciation 38,400. Similarly, furniture. Last year furniture was 7,200. To balance brought down 7,200. And current year furniture 4,500. 4,500. Right? How much is the depreciation on furniture? 1,200. So I am taking by depreciation 1,200. That's all. Now we have to find out whether there is purchase or sale of machinery and furniture. If you get the balancing figure on debit side, there is purchase. If you get the balancing figure on credit side, there is sale. So first of all, you see credit side. Credit side 38,400 and 153,900. So credit side is more, debit side is less. So here you should write on to bank. Balancing figure. Purchase. What we have purchased? Machinery we have purchased. Because balancing figure we are getting on the debit side. Credit side is more. But here in furniture account, debit side is more. Debit side is 7,200. Credit side 1,200 plus 4,000, 5,700. Credit side we are getting less. So here by bank. Balancing figure. It is not given in the problem. We have to find out. Sale. Right? Now we take the balancing figure. 38,400 plus 153,900. It comes to 192,300. So 192,300. Here also 192,300 minus 106,800. You will get 85,500 balancing figure. This is 85,500. What is this 85,500? Purchase of machinery. This is not given in the problem. By making this account, we come to know there is a purchase of machinery 85,500. When we purchase the machine, cash outflow, application. So here you should take purchase of machinery. How much? 85,500. Similarly for furniture. Furniture, debit side more 7,200. Here also 7,200. Right? So from 7,200 subtract 7,200 minus 1,200 minus 4,500. You will get 1,500. So what is this 1,500? Sale of furniture. When furniture is sold, there is cash inflow. That is a source. So here you should write down sale of furniture. How much is the sale of furniture? 1,500. That's all. We have completed the accounts. Now come to the funds from operation. In funds from operation, increase in surplus. Just now I told you 3,500. To this we add non-cash, non-operating expenses. First one, transfer to general reserve. The general reserve 9,000 rupees has been transferred from current year profit to general reserve. That we add back. Depreciation is a non-cash expense. We are providing depreciation on machinery and also on plant, on furniture. Machinery and furniture. 38,400 is the depreciation on machinery and depreciation on furniture 1,200. Add up, we'll get funds from operation 52,100. This funds from operation should be taken on the source side. Here we will take funds from operation 52,100. That's all. So we have completed. Now current assets. The current assets are inventory, trade receivable, cash and cash equivalent. It's very easy to make statement of changes in working capital. The only complication is you should be careful in source and application. So here Siddhant Limited, statement of changes in working capital. Current assets are given inventories, trade receivable, cash and cash equivalent. Exactly same values, whatever is given in the problem. The total current assets. Current liabilities are given to trade payable and short-term provisions. It is given in the balance sheet. Same items are added. A is the total of current assets. B is the total of current liability. So A minus B, working capital. Working capital last year 60,300. Current year working capital is 65,000. There is increase in working capital by 4,700. Increase in working capital 4,700. Take the total 65,000 both the sides. Now to confirm whether 4,700 is correct or not, increase and decrease. Now 66,300 to 78,000, increase by 11,700. 109,500 to 1,17,300, there is increase by 7,800. 14,400 to 12,000, decrease by 2,400. But current liability, it is opposite. Increase हुआ तो decrease, decrease हुआ तो increase. तो 1,00500 to 1,09,000, increase. So decrease column. Here also increase, so decrease column. Last one, increase in working capital 4,700 should be taken in decrease column. Now the total is 19,500, same for increase and decrease. That means our calculations are correct. 4,700 is the increase in working capital. I already told you every problem, increase in working capital should be taken on the application side. So here I am taking increase in working capital. How much? 4,700. Increase in working capital. That's all. I have taken all the items. Then debentures 78,000 I have taken. Share capital including premium I have taken. 8% debentures, trade payable, fixed assets we have taken. That's it. Now we will find out whether our balance sheet, whether our source and application will tally or not. 173,400 plus 85,500 plus 4,700. 263,600 is the total on application side. 263,600. Now we'll see the source side. 1,32,000 plus 78,000 plus 1,500 plus 52,100. 263,600. Our source and application tallied. That means we have done correctly. If you commit any mistake, the total will not be same. See, in this fourth problem, a number of new points we came across. Don't watch the video only once. 2-3 times if you watch this solution, you can easily understand. You can do it yourself. You can practice yourself. The only thing, you have to listen carefully whatever lecture I am giving. How we have prepared the machinery account, how we have prepared the furniture account. Opening balance debit side, closing balance credit side, depreciation credit side. Balancing figure if you get on debit side, purchase, credit side, sale. Purchase will be taken on application side, sale will be taken on the source side. That's it. And depreciation is a non-cash item. It will be added to surplus to find out the funds from operation. Funds from operation, source side. Increase in working capital, application side. That's it. Now share capital. Share capital increased, share premium increased. So combine. Issue of shares including premium. Debentures were issued. Issue of debentures. That's it. So we have completed third and fourth problem in this video. Inshallah, we'll continue the next problem in the next video.